While you were sleeping last night, 56% of the world just made a decision that's about to hit your wallet harder than any tax increase or market crash you've ever seen. I'm talking about a coordinated economic move by BRICS nations that's targeting the foundation of every American's wealth, the US dollar itself. And if you think this is just geopolitical noise that won't affect your stocks, your retirement account, or your daily expenses, you're about to discover why the smartest money on Wall Street is quietly repositioning right now. At least that's the research that Hugh came up with here, who's in charge of geopolitical stuff around here. Now, in the next 20 minutes, I'm going to show you exactly how this affects your portfolio, which stocks are at risk, why gold and crypto are suddenly outperforming everything else, and most importantly, the specific moves you can make today to protect and even grow your wealth during this historic economic shift. I'm Felix Prehn, that was Hugh, and over the past few years, I've helped over 20,000 retail investors navigate the market chaos through the Goat Academy, which I'm the founder. I'm also the co-founder of TradeVision.io, where we make Wall Street quality data and news available to you. But today we're talking about something that's been in the making for 80 years. The potential end of US dollar humanity, and it's happening much, much faster than anybody expected. The data I'm about to share with you is from this week. This isn't theory or prediction. This is a measurable economic warfare happening in real time. And by the end of this video, you'll understand exactly how to position your portfolio for what could be the biggest economic shift of our lifetime. But let me start with a number that should slightly terrify every American investor. 56%. BRICS nations are now 56% of the world's population. They are half of the world's economic might. And that means they're officially bigger than the G7 leading economic nations. That includes the United States. This isn't future potential. This happened in 2025, and most people have got no freaking ideas. So literally for 80 years, since 1944, the US dollar has been the world reserve currency. Every major transaction from oil to gold, international trade, it went through the US dollars. This gives the US an incredible economic power, and it means the US can print money, impose sanctions, and finance its debt very, very cheaply. But that 80-year dominance is under direct threat. Foreign ownership of US debt is falling. It's the lowest in decades. The dollar's global share of foreign reserves fell from 70% to just 58% today, over just 2 decades. BRICS trade volume has increased by $700 billion in just 3 years, and now 50% of trade settlement happens without the US dollar. So when Brazil chooses Asian electric vehicles over Ford, that's not just competition, that's economic realignment. When India doesn't want to buy US weapons, although Trump's trying to make them, that's billions lost American exports. When Russia creates their own payment system, that's infrastructure to replace the American financial dominance. Now, I want to give you more value than I can here in this short video. If you want to understand how Wall Street is actually positioning for these exact scenarios right now and learn the specific stock selection strategies these guys use, then join me in the coming week for a free live training where I will break down Wall Street's rules for you so a beginner can understand it. And that will be a live session. It'll be about 90 minutes long. You can grab yourself a free seat for that before it fills up at felixfriends.org/training. The link's down below in the description. But first, let me show you exactly how this shift is happening and how it's affecting the stock market right here, right now. Let me break it down for you into 3 categories. We've got the vulnerable, we've got the resilient, and we've got the winners. These are sectors, these are stocks, because there's always a winner. No matter what happens in terms of disruption, there's always a winner. So the really vulnerable are those who rely heavily on exports to BRICS countries. An example here would be Ford, which is losing market share to, say, BYD. So any US company that is exporting a lot to these countries. Think Apple, losing market share to Huawei and others. Now, watch the defense play very closely on India, because it looks like Trump is pressuring India very, very harshly and very strongly to make sure that companies like Lockheed Martin and Raytheon are going to get those billions of dollars of contracts. But if India doesn't budge and if India keeps buying Russian stocks, then those stocks will also suffer. Now, secondly, this also weakens the US dollar. And yes, some exporters will benefit, but the inflation impact from higher import costs can also crush profit margins. But let's move on to the resilient plays. These are tech companies with global reach, massive pricing power. Companies like Microsoft, companies like Google, companies like Amazon, they have global revenue. They can just adjust pricing. Are you going to cancel Office 365 or your Prime subscription because it's a few dollars more? No, you're not. But even these giants do need to be watched, because the BRIC nations develop more of their own tech and they're locking out these American tech companies that could still affect them. Now, domestic companies, so real domestic US companies, can actually benefit. And that's one of the sectors we've been benefiting with this year so far. Has been utilities. We're bullish on regional banks. I know, exciting, right? We're bullish on healthcare. So we're seeing money rotate into sectors that benefit from geopolitical uncertainty. Defense stocks, the domestic-focused ones. Energy companies, especially those producing in the US. And infrastructure plays. But you still need to know which of these stocks in these sectors are going to be the winners. And again, join me for the live training and we'll get you towards that goal. Now let's talk about the asset that's been quietly outperforming almost everything in 2025 and why every portfolio needs exposure. And by the way, I'm never sponsored on this channel. I never recommend something or talk about something or research something because someone's paying me. It will never happen on this channel. That's my promise to you. So let's talk about gold. Gold has been crushing the stock market returns this year, and it's not an accident. So while every investor is worrying about stock market ups and downs, gold provides the one thing no government can print more of: scarcity. Central banks worldwide are buying gold at record levels. And here's why. They see what's coming. Currencies are at war. Gold becomes the neutral safe haven that every country respects. Think about it. You're Russia. You parked some of your foreign reserves in London, some of it in Europe, some of it in New York, as is traditional. And then those countries are basically taking that money and they're going to give it to your enemy. Now, might not like Russia, but that's one way to see that, right? Now, so what do you think India is going to do? Indonesia is going to do? Any other emerging country is going to do? They're going to be like, we don't want to own any European or British or American debt. Why don't we just own gold and put it in our own basement? And that way we control it. We control our wealth. Well, that's what's happening. So this isn't just about inflation fear. It's literally a replacement of the dollar. So these sanctions, this weaponization of the dollar and reserves, means all those countries are now accumulating gold at faster rates. Now, the beautiful thing is you can own gold very easily nowadays. Yes, you can own physical gold, which is probably a good idea. It's the purest play, but you obviously got to think about storage. That's the one thing. Where can you actually store this safely? You also have gold ETFs, things like GLD, IAU, and so on. And the place where we've been making most of our money this year is actually mining stocks. Why? Because the miners tend to outperform gold by very, very large margins when gold goes up. Now, normally I'd say 5 to 10% in gold is probably decent. I think in this environment, with all that money printing, all that inflation, all the stablecoin madness, and all the rest of the world wanting gold, I think one could go bigger. I'm not telling you what to do. I'm just saying this is not financial advice. So I want to make that very clear. Not financial advice. I'm not telling you what to do. But it's something to think about. So maybe we shouldn't call it a recommendation. We should call it about something to think about, is to have more gold. And I'm doing that through most of these options on the screen here. Now, there is something which is more controversial. Cryptocurrencies. It could be the biggest winner this whole currency war. So Bitcoin was literally designed for this, a stateless currency that no government controls. And while everyone's discussing what currency should replace the dollar, well, Bitcoin doesn't really care about borders. Already being used for international trade settlement, bypasses traditional banking, El Salvador, Argentina, and other countries adopting Bitcoin as legal tender as a currency, and it's often called the digital gold. That comparison makes sense because, like gold, it can't be printed or inflated, and it can be transferred globally instantly. I mean, try sending somebody a gold bar, right? It's probably never going to get there. And you don't really need any government permissions. Now, I'm a little bit concerned that the US might put in government permissions on that, and they're going to be like, if you want to transfer Bitcoin, you need to tell us and you give us an ID. But for the moment, that's not happening. So for the moment, this is a good thing. And there is a limited number of Bitcoins out there, 21 million. There are now Bitcoin ETFs, which makes it very, very easy to own Bitcoin. No more wallets required. But we have to be honest about this. Bitcoin is very, very volatile. So I would have a relatively modest allocation to crypto, and I'm sure some crypto loons out there think it should be 100%, and I wish you all the best, and you probably make more money than me, but we all need to be happy with where we are, right? If it drops 50%, are you still cool with that? You've got to think about that, right? And if this all pans out and everything is fine and hunky-dory, well, you might lose a lot of your crypto exposure. But if the inflation continues and people try to avoid the dollar more and more, then this could go up tremendously. My God, 10 times. Not a promise, but it could. So it's an asymmetric opportunity. It could go up a lot, but it can only go down to zero. You see what I'm saying? So it could go up, say 10x, but it can only go down to zero. So again, a small allocation is probably what makes sense here. Bitcoin is the safest crypto bet out there. It's established, it's widely accepted. All the big banks, everybody owns it and so on. There is also Ethereum. You could look at that for smart contracts and so on. But I would avoid the altcoins and the meme coins, generally speaking, unless you're really, really into that space. All right, so we've covered the problem and the opportunities. Now, let me give you some specific action plans, ideas you could start implementing today. Not financial advice. You're going to make your own decisions. But first thing I would always do is audit your current portfolio. What have you got in there? If 90% of your assets are dollar denominated and you're all in like tech, maybe you want to think about some risk management. Now, a lot of people are saying you should put your money into emerging markets. I'm not a huge fan of that. We don't really understand them. We don't really know the regulation. We don't really know what's happening. We don't know the companies or the brands. I like to buy things that I generally understand. You could have more money in gold. Again, it doesn't have to be as much as 15 or 20%. And I would very much focus on companies with pricing power. We're going to get a lot of inflation, in my humble opinion. So therefore, I think that's a good place. We could have some crypto allocation. We could look at some US energy plays. We could look at infrastructure plays, the companies that benefit from onshoring. And I would start looking at this now, and I'd kind of put this into place over the next couple of weeks and couple of months, and keep watching for, are foreign countries selling or buying less US debt? The only countries that are buying US debt right now are the Europeans. They buy a little bit. The Brits buy quite a lot. The rest of the world is selling it. Right? Let that sink in. That's never happened before. And just remember, every major economic shift creates massive opportunities. Fortunes are made when there is disruption, not when the markets are boring. And Wall Street's already positioning itself, but you don't need billions. You just need the skill to actually pick better stock, pick better assets. And my goal is to help you with that. Join us for felixprehn.org/training, and I'll walk you through exactly how that works. You got some value out of this? Join me for the live training. Share this video with somebody else who might benefit from this, who doesn't quite understand yet what's going on out there. And I love you for watching. I love you for tuning in. And I hope to see you on the next one. If you hold any dollar assets, your savings, your 401ks, your bonds, what I'm about to reveal could either protect your wealth or leave you financially devastated. A Russian economic advisor just exposed what he claims is America's secret plan to eliminate $37 trillion in debt overnight.